Hi everyone, welcome to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Arturo Prestamo, the CEO, and Andres Bedregal, the CFO of Santacruz Silver. Santacruz, for those that don't know, is a company within our coverage that trades on the TSXV under the symbol SCZ. We currently have a buy rating and $2.50 per share target price on the company, which quite frankly is out of date. Metals prices have been rising quickly, as has the stock price of Santacruz. So we will be playing catch up there. But today I have Arturo and Andreas on to talk a bit about the story and get some updates. So thanks for having you here today, gentlemen.
A pleasure, Ben. Thanks for having us here, and it's always a pleasure being here with you and your audience.
Yes, mine as well. So with that, Arturo, maybe just for the viewers that don't know the story, you can give sort of a 4 to 6 minute pitch, get them up to date, and then we'll get into some more particular questions and see where you are at today.
Absolutely, Ben. Well, we're a multi-jurisdiction, multi-metal producer, both in Mexico and in Bolivia, or both jurisdictions where we feel very comfortable working at. And I mean, just as a reference, we this year will be producing shortly north of 15 million ounces of silver equivalent for the year, where you will have around close to 8 million ounces of pure silver. We have 4 producing mines, 3 in Bolivia and 1 in Mexico. In addition to our producing mines in Bolivia, we have a trading company as well in Bolivia, which complements nicely into our business model. And that's relatively, um, I mean, generally what the company is all about. We have a very experienced and seasonal management team in place, both in Bolivia and in Mexico. An excellent COO, Eduardo Torresillas, who has been in the industry for more than 20 years, and Andres Bedregal, who is joining us today, our CFO, which I'm honored to join and team up with him, as well as with all of our team of professionals. So that's, generally speaking, what Santacruz is of today. We're on track to deliver our production for the third quarter. Production and operations have been running smoothly. We're recovering from situation at one of our mines, at the Bolivar mine, where we have an additional water throughout Q2. Q3, it's almost back on track, and we expect to start Q4 with a strong production at the Bolivar mine once we have recovered these 2 areas that were a little bit, I mean, let's say they were flooded with some additional water than what we used to handle at those areas. But now that's back on track, and but nonetheless, I mean, San Lucas, the trading company, has complemented and offset the lower production from Bolivar. So Q3 will be a good quarter for us. Financially speaking, will be a very strong one as well. And yeah, that's pretty much where we are today, Ben.
Great. Well, I appreciate that. And maybe we'll dive, before we get into sort of the up-to-date items, a little bit just on the history, if you don't mind, Arturo. Where were you guys 2 years ago, 3 years ago? Talk about the Glencore transaction, and then that'll lead into some recent news of yours earlier in the month that we can talk about as well.
Absolutely, Ben. Well, back then, I mean, 3 years ago, we have only the Simapan mine, the mine in Mexico. Actually, 4 years ago, the Simapan mine, which produced around 4 million ounces silver equivalent, and it's a mine that requires or was needing some additional developments to arrive to what we feel it's the future of that mine, which is level 960. Throughout the last year and a half, we have been preparing those areas, and finally we have arrived to level 960. So you should expect that mine to improve the production by means of additional increase on its head grades. and we're working to get that mine to improve its recoveries as well. Both combined will take you to an increase and a very solid production for the coming years, no? And in 2022, in March, actually March 2022, we acquired all the Bolivian assets from Glencore, which include 3 underground mines and 1 trading company. So the first year, our main objective was to experience a smooth transition as we take over those assets. The second year, we were boots on the ground, as Andres described it in a previous meeting. Boots on the ground, making sure that production and budget is delivered, and we met our goal. We actually produced 30% more than the record production of those mines in the previous years, no? So that proved that the transition process came along smoothly and in line to what we expected. And following that, we announced the restructuring of the Glencore transaction. And that was also a milestone for the company as it positioned our balance sheet and our financial strength in a very, let's say, very solid position, in a very solid way, which has allowed us to invest into the mines what they require to keep producing and have a strong production meeting our budgets and our internal guidances, no? So that has been the last 5 years of the story of the company. So today, both jurisdictions, if you allow me to put it that way, combined, we're producing around 7-8 million ounces of pure silver on a yearly basis, and a significant amount of zinc, around 80,000 tons of zinc on a yearly basis, a little bit more than that. We also produce some copper in Mexico. So I think, Andres, is there something that you think that we should describe in a better way, or?
I mean, it's important for all the investors and future investors to know is that the Bolivian acquisition was a significant step because from our portfolio base, it represents around 75% of the company. So in 2022, we follow a clear strategy, since the acquisition. As Arturo was describing, in 2022, it was all of boots on the ground, taking control of the operation. That was the main objective. On 2023, we focused on increasing the production of these mines, which for us was very, very relevant. In 2023 and 4, we focus also on the productivity of these mines, meaning that more metal from our ore. So that was the first focus that we have when we took over. It is important to understand that the Bolivian operations are not just one, are different mines in different places. So the important thing to do was to take control of them. We basically are a management that is put on the grounds management. So we have done that. Now, in 2025, we have been focused on this productivity, financial discipline for the company. We have been reducing some of our liabilities to put this company in a strong position then. So I think that was the most relevant. That's what we call the new Santacruz, because this Glencore acquisition has been very relevant for us, and not only has increased our asset base, but we were able to even increase the production of these assets, record production from all the years that I've been running.
Yeah, and so just remind me, when did the restructuring of the Glencore transaction happen?
It was announced in October 2024. That was officially the date. And one important thing, Ben, I mean, as we have already been a few years now with a transition process, or more so, I mean, with a consolidation of this acquisition, and with production going the way that we budgeted and that we aimed our production to go both in Mexico and in Bolivia, and at the same time building such a strong treasury, finally with the Glencore payments behind, we were, in addition to having, I mean, let's say, the muscle to do and to look for additional ways to grow. We have an excellent team of professionals, so we feel capable of starting to look even outside of the company what will be the next steps to keep growing and building the
Right.
companies.
And before we get into that, I do just want to stay on the Glencore transaction. So the story when I was introduced to it was sort of had this cloud of debt payments to Glencore over its head. The restructuring minimized those payments in the near term. Can you talk about the September 4th release that happened earlier this month, which essentially wraps up that transaction? But why don't you just touch on that um, and fill the viewers in?
Right. Absolutely. Well, actually, if I go one step back and to the original Glencore transaction terms, these were four items that we needed to meet, and one was the cash consideration payment for $110 million, which we should be honoring every year, 22.5 million, sorry, every year for the 5 following years. No, that was the cash consideration. Then all the value-added tax that was generated while Glencore was running these assets should be returned to Glencore once we collect those monies in Bolivia. No. In addition to that, when we closed the transaction, they were $9 million of net revenues of inventory that was left in our patios. So once we ship those inventories out, we should return those $9 million to Glencore because, I mean, it's fair. It was their money, no? And finally, all the assets across Bolivia, they had a 1.5% NSR, right? Just to give you an idea, today will be equivalent of $12 million a year on average, no? So those were the original terms. The terms that we reached and that we announced in October 2024 were very straightforward, very simple. Cash consideration payment of $80 million with an that you should start paying November 1st, 2025. I mean, in a few months' time from now. At that time, you should pay $10 million every year for the following 8 years, right? And we include an acceleration clause that allows us to make $40 million payment, $40 million payment on or before November 1st, 2025. If we were to achieve that goal or that acceleration clause, technically we got rid of the following payments. No, so in other words, the $40 million are the equivalent of bringing those $80 million into net present value at November 1st, 2025, with an implied interest rate of 15%. No, so we execute on the acceleration clause, and we did the final payment now in a few weeks ago in September. And with that, we are covering the cash consideration payment. So that's good, and there's no more payments to be done to Glencore, no? In that regards. And then we have what we call the conditional value rights, or CVRs. The CVRs are, as they said, a value of an asset that is conditioned to having, in this case, to having zinc north of $3,850 per ton. At that moment, we should pay Glencore $1.3 million every month, no? Which is capped. If you do the math, it's capped at $16 million per year, no? Hopefully, we get to pay those because that means zinc is at those levels, and we're making a significant amount of money at that time, no? So, in the other hand, we're keeping the value-added tax that was originally generated, $58 million, $56 million. We're keeping the $9 million of the original inventory at the moment of signing the transaction. And very important, we're getting rid of the NSR. So we have no more NSRs in the company. So we're saving technically $12 million on a yearly basis. So it's a very straightforward, very clear clean transaction, which translates into a stronger balance sheet and allows us to keep building the company for many years to come.
Mm-hmm. Mm-hmm. No, it's great. And I think for all of that to happen really in less than a year has been huge for the company, and you guys have been rewarded via the share price. And obviously the metal prices are helping with that, but you guys were trading at a very low multiple relative to peers, and you're still a bit below peers, but despite doing so well. So I wanted to dive into a couple questions I had with regards to the assets. So Arturo, you did mention the flooding that was taking place at the Bolivar operation, a bit more inflows than typical. Can you just talk about what happened and then what you guys have done to resolve that?
Absolutely. And that, I mean, I need to recognize the great job that was done by the team at site and directed by Eduardo Torresillas, our COO. What really happened at Bolivar mine, Ben, you have a few veins in the area, no? The Rosario vein, several veins, no? But the most important veins, silver-wise, are the Pomabamba vein and the Nane veins, no? Those two veins are relatively closed, and we intersect what we call the bucket of water in the area. So the normal or average water flow in the area is around, let's say, 170, 150 liters per second. Andres, am I right?
Yes, that's correct. That was the normal.
So that was the normal. So suddenly, as we were advancing in the Pomabamba vein, we hit a bucket of water that brings the water levels to more than double the size, to north of 380 liters per second, like immediately, no?
Mm-hmm.
So we luckily, and well, not luckily, this was already something that Eduardo and the team were seeing. Before this happening, they have already prepared an additional dewatering system and a piping system, and including its pumping system as well. So that helped us to immediately take action and mitigate part of the immediate flooding that we were experiencing. But right after that, they include an additional piping and pumping system, which takes now, as we speak, the dewatering level to up to 400 liters per second. So we are now beyond the watering situation in the Bolivar mine,
Mm-hmm.
the two veins. So now the mines are coming to a dry level, or a level that is safe for our miners to go back to those areas. So we expect Q4 to have those veins, Pomabamba and Nane, again in full production. So
Right.
that watering or dewatering has been very successful. And just for the caution, we have included a fifth dewatering line. So we have now a very robust dewatering system in place. So we expect that nothing like this will happen again.
Mm-hmm.
I
Well, and I guess,
think- Sorry, Ben. I think something
yep.
that it's important to highlight is our business model, because we consider that we have comparative advantage because of the mines, but also the competitive advantage because of San Lucas. We need to remember that the throughput was supported by the San Lucas operation, which sourced third-party ore for temporary shortfalls. So while this Bolivar issue has bring the production a little bit down, San Lucas stepped in and help us have a balanced approach to our operation, which allow us to deliver consistent results this Q2. So this brings a very valuable thing that Santacruz brings to the table, which is their business model.
Right. Well, and that's sort of what I was going to bring up is that, you know, being a multi-asset producer, that reduces single asset risk.
Definitely.
And so you've already checked that box, but then also having San Lucas come in to be able to further mitigate, you know, any operational risks on site and pick up the slack where there is slack is a great essentially redundancy, right? You've got all this piping and pumping systems in place as redundancies, and you've got, you know, San Lucas to be a redundancy as well, I guess. But maybe on that, just for the viewers, can you touch on San Lucas, that whole business model, how it works, how it is picking up the slack, just so that people understand that model there?
Yes,
Yeah,
of course.
absolutely, Ben. Actually, no, please, Andres, carry on.
Okay, Ben, the San Lucas model is a margin-based model, which means that we buy ore from third-party producers and we process it in our plants. The first objective that San Lucas had for the company was to keep our milling facilities running at 100%. That's the first objective. The second objective was also to keep this good relationship with our communities, buying ore from them, so also bringing value to the communities where we work. So San Lucas is, we're calling this comparative advantage that we have as a company, because San Lucas allow us to bring these plants into production when there's a shortfall, for example, in Bolivar. That's the main objective that it has. But also has a very unique business model, because when we buy from third-party miners, we retain the taxes from them. We pay those to the government, and we are able to compete, for example, with maybe illegal or other type of plants in the region, because our milling facilities are top of the line, and we are able to recover more metal from our concentrate. So that's basically what San Lucas does for the company.
Great, great. I appreciate that, and it does make a lot of sense. You know, this last quarter is a testament to that. So then I did want to talk about the future. Now that these Glencore payments and this acceleration payment is paid off, you know, silver and metal prices are doing really well. You guys are heavily cash flowing. I would like to talk about, you know, a little bit about what your plan is to do with all of this extra cash, right? By way of maybe dividends, buybacks, M&A. You mentioned a little bit earlier, Arturo. You know, obviously you can't talk about what's actually going on, but you guys are starting to come up with plans on what to do here. So maybe I'll leave it to you guys there.
Yeah, no, good point, Ben. Yeah, actually, from our organic point of view, or sorry, from our organic, if you allow me, growth, yeah, we're going to be getting our Soracaya brownfield property fully permitted for production this year. So we have already started that process. I mean, expect some news coming out in that regards, and that's our organic growth, no? And from additional things like M&A, we have our eyes open. We have been reviewing different things, and yeah, of course, there are things that we cannot talk openly, but we're keeping our eyes open, and as I was pointing out, we have a very strong team, both in the technical side, in the administrative, in the accounting. So we're prepared to review opportunities, but always with a close, let's say, with a cautionary statement that this should be accretive to our investors by all means, no? So with that in mind, yeah, we're open to see different alternatives that, so yeah, we want to keep growing the company.
We also see the future of Santacruz as one of growth and consolidation. First, we are committed to unlocking further value from our current assets, through operational efficiencies, technology adoption in our plants and our mines. For example, in Mexico, we are improving our milling facilities in order so it can recover more metal from our concentrates. Just an example, in Bolivia, we recover about 90%. In Mexico, it's around 77%. And since Mexico is a high volume operation, if we are able to increase these recoveries, that could be very significant for our financial No, that's one thing. And also we continue to evaluate organic growth that Arturo was mentioning, opportunities, and also potential acquisitions. Also, but also always focusing on enhancing productivity rather than the expansion for its own sake. I think
Yeah.
we have demonstrated that when we took over these operations in Bolivia. We did not only brought us to the Santacruz asset base, but we have improved them. So that's our main focus right now. And as Arturo was mentioning, we have the team. We are not only a multi-jurisdictional, multi-asset, but also a multi-method. I really like to say that because we have different types of mining methods in Mexico, high volume, Bolivia, narrow veins, high tech mining, also more traditional mining. So Santa Cruz is very well positioned to take over any open pit or underground mine, not only Bolivia, Mexico, but in Latin America as a whole.
Yeah. Well, and that's important. It just opens more potential doors in terms of M&A opportunities.
Absolutely.
And I think investors can be confident, having seen the track record of your successful M&A over the last few years, as we touched on with this whole Glencore transaction. And that's where, some of these major mining companies, they may not prioritize some of these smaller assets, and they don't have the time, nor do they want to invest the capital to turn them around and turn them into highly cash flowing businesses. But ultimately, there's a bunch of value there, and you guys have proven that over the last few years. And of course, the metal prices help, but nonetheless, that is, Andres, what you were saying is if you can find an asset at a reasonable price, but then know with your expertise you're able to improve operations, reduce costs, etc., you get that much more return on your money down the line. So with that, gentlemen, I appreciate the time. Was there anything else you guys wanted to mention before we hopped off?
No, I think I mean, we're ready to keep moving forward and growing the company, Ben. Expect some, stay tuned, as they said. We have some good things coming, and we've been working hard, and we'll keep doing so. Yeah, nothing more. I mean, we'll keep focused on our production, our operations, and also with some interesting ideas to keep growing and building the company.
Yes, I
Great.
think, Ben, overall, Santa Cruz is a company that combines operational strength, financial discipline, and a future growth potential. So I think these last years we have built a foundation that allows us to deliver not only value today, but also position ourselves to grow responsibly and sustainably in the years ahead.
Right.
Yeah. Well, no, I appreciate that. And even from a quarterly production and results standpoint, you guys blew our numbers out of the water in both Q1 and Q2. I imagine it may be something similar in the back half of this year, and we'll keep our eyes out for that. But, I thought I'd just wrap up with, for the viewers, if you haven't seen our research on Santa Cruz, you can find that on our website at atriumresearch.ca. You can get up to speed by reading the last few research notes on the different quarters, as well as more up-to-date research that we've written. But generally, appreciate everyone tuning in. Arturo, Andres, thanks for your time today. Glad everything's going well, and we'll continue to follow along.
Absolutely, Ben. Thanks for the opportunity.
Okay, thanks, gents.